So this is going to be just a walkthrough of some of the problems at the end of the chapter for Chapter 16 on the statement of cash flows. So the first question that we're going to look at, and these, like I said, are coming from your book. So we're going to look at question S16.7, which the problem starts on page 973 and then continues over to page 974. So if you follow along with me, that would probably be the best bet for you. So take a look at S16.7, Computing, Investing, and Financing Cash Flows. It says Kyler Media Corporation had the following income statement and balance sheet for 2015. And then you've got some data there from the Kyler Media Corporation income statement. And then continuing over on to page 974, you've got some comparative data because you have the comparative balance sheet between 2014 and 2015. So these are the balance sheet numbers as of the end of 2014 and then also as of the end of 2015. And so our requirements say, for question 1, part 1 of this question, compute the acquisition of plant assets for Kyler Media Corporation during the year 2015. The business sold no plant assets during the year. So what we're going to have to do is we basically have to look at the information that's given to us on the financial statements. And it's going to be on the comparative balance sheet that we're going to want to take a look at this because that's where the plant assets will be listed. And you can see there that that we're not given anywhere what the amount was of plant assets that were acquired during the year. So what we're going to have to do is use the information that they gave us, and we're going to basically construct a little T-chart here that gives us debits and credits to plant assets for the year. And here, I'm going to just format this up a little bit here. Make it look nice and pretty. There we go. And let's just go down here. And put that in there. Okay, so we have our nice little T-chart here, and we're going to start out over here with on the debit balance with what shows up for the year 2014. So that's going to be our balance as of 12/31/2014, and that amount was $83,750. Okay, and then we know that as of 12/31/2015, we're going to have a balance of $100,350. Okay, so even though we didn't get a specific outline of exactly what was acquired during the year, we can look at and just kind of deduce the amounts that were of plant assets that were acquired during the year, because we know we were given the information that there were no disposals. So we know that the right side of the T-chart, the credit side, is going to have no information on it. So all we have to do is figure out what amount, adding what debit amount to this number lets us arrive at this number at the end of the year. So I would just pick a cell in between these, put a little formula in here with the end amount minus the beginning amount, and that would be our acquisitions for the year. Okay, so that one's pretty simple. When there's no disposals, you know, all we really had to do was this pretty simple subtraction problem to get us from the ending balance of 2015 to the ending, or the ending balance of 2014 to the ending balance of 2015. Okay, so that was requirement 1. And then for requirement 2, and let's see if it'll let me keep this. Whoops. I need another T-chart here. Well, didn't exactly come out like it was supposed to, but it's all right. Fix that pretty quickly here. Okay. So requirement 2 is asking us about notes payable, and the prompt for requirement 2 says, compute the payment of a long-term note payable during the year the business issued a $5,300 note payable. So again, we're going to be looking at the comparative balance sheets. This time, since we're talking about a liability, we know that whatever balance is in this liability account, it's going to be a credit balance. And at the end of 2014, that credit balance was $15,000. We know that as of the end of 2015, we're going to have a $9,000 credit balance. And so in between here, we know that we are going to end up with a net debit to this account of $6,000. Okay, because we decreased from $15,000 to $9,000 by the end of the year. But we're also given the information that during the year, we're going to issue a $5,300 note payable. Okay, so when we issue a note payable, that goes into the credit side of the notes payable because we are increasing our liabilities for the year. So now, if I add these two together, $15,000 and $5,300, I am left, and I'll put this out to the side, with $20,300. Okay, so what I now need to figure out is the amount from $20,300, because that's starting balance plus anything I added during the year gets me here, and then I got to put something in the debit side that reduces this amount to get me to my ending balance here. So all I have to do here, I'm going to do another little equation. I'm going to take this $20,300 and I'm going to subtract $9,000 because that's what's going to be left over, and I see that the difference between those is $11,300. So what that tells me is that that has to be my payment amount for the year, because a payment within notes payable shows up as a debit because it's reducing my overall liability. And since I already increased from the starting balance of $15,000, I increased it to $20,300. I now need to reduce it by $11,300 to get to my ending balance of $9,000. So this is how I would answer these questions. If I were given these questions, I would just do a T-chart, and then I would plug in the various amounts that get me from the beginning balance that I know, and use any information that they've given me to let me arrive at the ending balance, which I also know. So same thing true down here. Given beginning balance, given ending balance, given a little bit of information in between, and I have to deduce from that information what actually transpired to make that happen. So, using the information that I acquired by doing problem S16-7, I'm now going to move into problem, S16-8, just a little bit further down the page, and it says, preparing the statement of cash flows using the indirect method. Use the Kyler Media Corporation data that you acquired in short exercise S16-7 and the results you calculated from the requirements. Prepare Kyler Media's statement of cash flows using the indirect method for the year ended December 31st, 2015. Okay, so in order to do that, let's do a little bit of formatting here just so it looks somewhat presentable. Whoops. Take it out to there. I'm just going to merge cells, wrap text, center, center. You don't really need to do this. This is just, as the professor, I like to make it look pretty as well. Okay. So, let's say Kyler Media Corp. Oops. Statement of cash flows. Sorry, my OCD is getting to me a little bit here. Let me back this up. Undo what I did there. We'll just not merge them together here. Statement of cash flows. Year ending December 31st, 2015. Okay. So we're going to start with, remember, for the statement of cash flows, we're basically looking at cash from operating activities, cash from investing activities, cash from financing activities. So cash flows from operating activities. And we're using, actually I probably should have put up here that we are using the indirect method. Okay, so because we're using the indirect method, we start with net income. And we're given net income, if you look back at the information on page 973 in the income statement for the year of 2015, we're given that the net income was $25,400. Okay, but then I need to make a few adjustments to that. And these are to reconcile net income to net cash provided by operating activities. So I need to look at my depreciation expense for plant assets, and you can see that also on page 973 in the income statement, and you can see that that's $5,600, and that's $5,600 that we're going to add back in to our net income. Then we have a little increase, in accounts receivable, and that will actually be subtracted here. And then we have an increase in accounts payable. And that will be added back in. Okay, so that takes us down to net cash provided, by operating activities. And we're basically just going to add these up. You can use a summation formula here if you want to, or just do what I did and push your little equal sign and click on each cell and the plus sign next to it. And we see that our net cash provided by operating activities comes out to $30,500. Okay, so then the next category that I want to look at is cash flows from investing activities. Okay. And for this one, we really only have the purchase of the plant assets that we saw back up here in the requirement 1 of the previous question, and we see that that amount was $16,600. So we have cash purchase of plant assets. We know it's a cash purchase because we didn't see any of our liabilities increase by that amount. And I said that was for $16,600. So that's going to be a negative there. And we'll just carry that down. And you see, since that's the only aspect that shows up in the balance sheet or the income statement that is an effect on cash from the investing activities, and it's a negative balance, so instead of saying net cash provided by, of course, this is going to say net cash used by investing activities. And that's just carrying that number over. Scoot up a little bit here. Then we have cash flows from our financing activities. Okay, and we need to look back and determine what cash flows existed there. So if you take a look at the stockholders' equity section, you can see of the comparative balance sheets that common stock went from $17,000 in 2014 to $22,000 in 2015 for an increase of $5,000 worth of common stock issued. So what that means to us is cash receipt from common stock and that's for $5,000. We also see from our liabilities and from this requirement 2 up here that we issued a note payable for $5,300. So that's basically us giving someone an IOU for $5,300 and getting in return for that $5,300 in cash. So we have cash receipt from note payable, $5,300. Remember, all of these pluses and minuses here are going to be, not necessarily related to individual accounts, debits, and credits, but rather the effect overall that each of these elements had on cash. So, when we purchase plant assets, yes, that's a debit to an asset account, but what happens to cash when we do that? It goes down. When we issue a note payable, obviously we're going into debt. It's a liability, but the net effect of that on our cash is that we get $5,300 in cash. So again, if we take a look at let's see here, what other ones we need to pull out of here. So the last 2 items that we need to account for here on the financing activities are back from here. We figured out that we paid off $11,300 in notes payable. So we're going to have a cash payment of notes payable and then the final item that we need to look at is whether any dividends were paid. And we're not given that information, so we have to, again, try to deduce that from what we are given. So if you look at retained earnings, as of 2014, we're 38,900, and that's just given to you in your comparative balance sheets. And then we see that our 2015 retained earnings were 52,400. Okay, so generally what would increase retained earnings from 2014 to 2015 is the net income that we saw in the income statement. So if you look back on page 973, you see the net income was 25,400. However, in this case, we can see that if you add 25,400 to 38,900, you don't get to this number. So we'll add those two together. Hold on a second here. 25,400 plus 38,900. Whoops. Gives us 64,300. Okay, so this amount here is what our ending retained earnings balance would be if we had not paid any dividends for the year. So what does that tell us? It tells us that we did pay dividends, and to find out how many or how much in dividends we paid, we take the amount that should be in retained earnings and subtract out the amount that actually is in retained earnings, and the difference between those two will end up being the amount that we paid in dividends for the year. So we have 64,300 minus 52,400, and we're left with an $11,900 cash payment of dividends. So we roll on down here to cash payment of dividends. We record that as a negative because our cash is decreasing when we pay these out. Okay, and so these, if you look up and down the comparative balance sheets and the income statement, these end up being all of the cash flows relevant transactions from financing activities. So we will just total those out, and I'm gonna let's see here. I won't use a formula because I don't want to confuse anyone that's not terribly familiar with Excel, but if I just click on the equals button, highlight the cell, put plus sign, highlight the next cell, plus sign, next cell, plus sign, final cell, enter, and I get my net balance here, net cash used, for financing activities. Okay, so we're almost at the home stretch here. Now we just need to basically total up the three categories: operating, investing, and financing activities. And so we'll say that increase or decrease, depending on how it plays out, in cash, and we'll say that equals operating activities plus investing activities plus financing activities. So that gives us an overall net increase in cash of $1,000. And so I will put cash balance as of December 31st, 2014 is $3,800. You can see that right there in the comparative balance sheets. That's $3,800. And cash balance at the end of 2015, $4,800. Okay, so this is a good place for you to check to see if you know everything you've done up here in your statement of cash flows is accurate, because at the end of the day, whatever you come up with for this number here needs to agree with the ending balance that you see in the comparative balance sheet in the cash account for 2014, and then you should either add or subtract this number and be able to arrive at the balance as of 2015. And so if I had a different number here, like say I had $5,000 here, obviously these two, you know, if I add $5,000 to $3,800, I'm not going to get to $4,800. So if those don't agree, these things in the last three rows here, then you need to know, you need to go back in here, take a look at everything you've done, and try to determine where your mistake was. Okay, so this has just been a couple of examples of working with a statement of cash flows using the indirect method. If anyone has any questions or would like to see any specific type of problem covered that we didn't look at in this little tutorial, you can shoot me an email or you know, just stop by my office and we can work through something. Otherwise, you know, this is a pretty straightforward chapter, so make sure, take a look at this, make sure you've done your homework, take a look at the video lecture, and we'll go from there.